Hello everyone, this is Tom for the Market Zone, and this is a new weekly markets analysis video. In this video I'm going to cover some of the changes, some of the updates of the price action updates of things that have happened since the market opened on Sunday, since my latest analysis, the weekly market analysis newsletter, which if you haven't read already you can find at my website www.themarketzone.net. Go to the weekly markets analysis tab and see the first post there. So if you haven't read the weekly newsletter, go check it out. And in this video I'm going to talk about the updates, what happened since then, and also show you some charts that I haven't mentioned in this week's newsletter. So stay tuned, stay with me and see the charts. And before we start, I want to thank you again for watching this video, whether it's on my YouTube channel or on my blog. Thank you again, appreciate your support. And if you want to approach me, you want to ask me some things, you can write me an email to tomerj@themarketzone.net. So I'm going to wait for your emails. If you have any questions or any requests, feel free to write me an email. Now let's see what the charts are showing us. So we are still in the first few days of trading in the new trading year 2017, and considering the fact that we are a couple of days before the earnings season kickoff with the major banks reports on Friday, it makes sense that we haven't seen the S&P moving that much so far. But what I want to point out in SPX, this is the daily chart, is a potential false break scenario that we have here. Last week on low volume the S&P climbed to new record high but couldn't stay there, and now we see the price below 2016 highs level. We had a small doji pattern here yesterday, and today we see a small bearish candle, but just in the early morning before the European session, so it doesn't count as a daily candle. But what we are seeing that the price right now is below previous highs, and what I want you to pay attention to is to this line, this fast moving average line. That's the 18 SMA line, which is now a minor support zone. Last week it was a minor resistance level that I mentioned in the newsletter, and now that the price is above it, it should act as support. If you are bearish, you want to see the price closing below the fast moving average. That can trigger the false break scenario and create a bearish opportunity for a short-term pullback that will drive the S&P towards 2200 or the 50 days moving average line, which is another support line that you need to pay attention to. So a close below the fast moving average line can trigger a short-term pullback and a bearish opportunity that you may exploit if you are looking for bearish opportunities on S&P or stocks. If you are bullish, you want to see the fast moving average holding as support. Good earnings from banks, for example, can drive the S&P from this line higher to new record high. So if you are bullish, that's the line that you want to pay attention to, and that's what I have for you on SPX. So pay attention to the fast moving average line that will be tested probably towards Friday. We have Yellen speaking, we have Trump speaking I think today, so I think that this line will create some action this week. Pay attention to it. The next chart I want to show you is the dollar index. This is the DXY daily chart, and not much has happened since the market opened on Sunday. But what we can see is that despite a small sell-off that we saw on Monday, 102 is holding as support. We had a bullish reversal yesterday, and the price again is above 102. And that's important towards Trump's speech that is scheduled later for the week. We still see that the RSI has a bearish momentum in it, but as long as 102 holds as support, it has the potential to drive dollar index towards 102.8, 103, 104. This is this structure zone. Let me show you this structure near 104, between 103.5 and 104, and maybe even towards the completion of this bearish harmonic pattern. That depends on how Trump will impact the dollar index. So pay attention to 102. I mentioned to the lead zone members that I see potential reversal in the dollar index, bullish reversal, and I see it also in other major pairs, gold, and I'm going to show you some of these bearish setups later in this video. So pay attention to 102. We'll also notice that the 50 days moving average is approaching the price, getting really close to the price. It should provide support. So I think that as long as 102 holds as support, we have a bullish potential in the dollar index. It's very interesting to see how it will develop towards the end of the week. If we will look at gold's chart, this is XAU-USD daily chart. We can see that gold is facing a daily resistance zone that I'm going to explain in a minute. But since gold and the dollar index have inverse correlation between them, bearish reversal, bearish potential in gold means bullish potential for USD, and that supports the bullish potential that I mentioned in previous chart. Gold is facing daily resistance zone that includes includes a daily structure that was support here, now should act as resistance. It includes the 50 days moving average that it is being tested right now as resistance, and it includes the $1,200 level, psychological level, round number that can act as profit taking level. Definitely adds up to the resistance that gold is facing. So if you want to short gold, you can focus on the zone between 1190, 1210. That's the zone that I would focus on, with 1200 as the main level, that profit taken level that we may see gold spiking into. Although if you want to be very aggressive, you can start shorting gold from its meeting point with the 50 days moving average. But I think that since we are very close to the 1200 level, usually we see the price reaching such psychological level, maybe even spiking above them. That is why 1210 is also a level that you want to pay attention to. The same scenario we see in EURUSD, also a scenario that supports potential bullish potential in dollar index. We see that EURUSD, although it is holding the 104, 1.04, 1.05 weekly support zone, it still hasn't created any higher high or higher lows, so we don't see any change in trend right now. We are still in a downtrend. We see a pin bar here when EURUSD tried to face this structure zone was support, now act as resistance. We saw a daily pin bar also yesterday. Still the price is above 1005, but I think that you should pay attention to the 50 days moving average that clearly acts as resistance right now. EURUSD bearish potential as long as the price remains below 1.06. We may see a pullback towards 1.04, 1.045 EURUSD, and that covers the whole dollar index section of this video. The last two charts that I want to cover in this video are two European charts, two index charts, a UK 100 and the German DAX. This is the UK 100 weekly chart that you see right here. UK 100 had an awesome start to 2017, continuing the December's 2016 trend and continue higher. The interesting thing is that right now this week's weekly candle is above a weekly trend line that I mentioned to the lead zone members, and I was monitoring, and actually I thought that will hold UK 100 price below it, but that's not the case, of course. So the price right now is above this trend line, but if for some reason by the end of the week we are still far from closing the weekly candle, if by the end of the week we will get a weekly reversal pattern, a pin bar that will drive the price below 7200 and close back below that trend line, it will create a weekly false break scenario that you want to pay attention to towards 2017 and maybe look for bearish opportunity once it happened. Look for bearish opportunities on UK 100. So pay attention to this weekly trend line, which was the top of a trading channel. Paint it, draw it on your charts, and pay attention to it. Obviously, the first support zone will be this high near 7100, but more importantly, I think that the weekly false break here will signal that we are heading towards the bottom of the channel on a longer term analysis, and that is a huge opportunity if you're looking for bearish opportunities on the European markets. The German DAX is grinding its way towards 12,000, which there it will complete a bearish bat pattern. Now notice that we are near the 78.6 Fibonacci level, which usually is a reversal level, so we may see a pullback towards this support zone near 11,000. But if for some reason the DAX will continue higher, 12,000 it's a very interesting weekly reversal pattern and a weekly reversal zone that you want to pay attention to, that may offer a great bearish opportunity again for those of you who are looking for such. So the German DAX potential short-term pullback from the 78.6 Fibonacci level, or if it will continue the bullish momentum near 12,000, look for bearish reversal patterns, some daily pin bars or daily outside bars, bearish engulfing patterns, whatever you're using near 12,000 to look for reasons, technical reasons to enter a bearish trade on a German DAX, or again ETF that follows the German DAX or some stocks in the German market. That's it for this video. Thank you very much for watching, and again, if you want to take your trading to the next level, see this kind of analysis each day, each week, join us. Join the Elite Zone. You can see the Elite Zone at the services on my website www.themarketzone.net. Go to the services, go to the Elite Zone, and join us. Take your trading to the next level. I'm waiting for you. Thank you again. See you in the next video.